Well, howdy there, folks. Welcome into today's video. Four different things I want to react to in this one here today. First one's up here, Palantir stock. We're going to kind of read the summary and go over some of the main points in this article from Seeking Alpha. Palantir, $50 is not unreasonable. This came out on November 16th. I thought we'd talk about that in Palantir stock going to $50. Obviously, we just cracked $20. So congrats to all fellow Palantir bulls out there. It's been a fun time to be a Palantir shareholder this year. That's for dang sure. Okay, then we're gonna get a little bearish. Palantir stock, look out below. I want to go ahead and kind of talk about a few points this individual makes in regards to Palantir stock and kind of share some perspective on that one there in terms of Palantir going down a lot. Then I want to react to this video. Larry Summers, 25% odds of recession. Wow. That's a pretty low probability. That's lower than even I have. So I want to go ahead and react to that one, kind of, give my opinions and perspectives on that one. Then last video up here is this one. We're going to get into the bull case is getting stronger, but the bear case isn't dead. So I thought this was an interesting one from yesterday that I want to go ahead and react to with you guys here today. So appreciate you guys joining me as always. Thanks so much for being here. New all-time high subscribers in the history channel. Appreciate each and every one of you. As always, Black Friday sale. We are now only 5 days away from the once-a-year massive sale. You get access to become a Master Stock Market course, ability to see the moves I'm making in the market each week, plus see exactly how I build and diversify my funds around in a Fidelity portfolio. So yeah, got to get in and be part of that. That's pinned comment down there, and then we'll send you over the deal either to your email or text when it comes out on Black Friday. It's a one-day sale. Also, for the second pinned comment down there, I'll put a Seeking Alpha link I had back when I did a sponsorship with them back in the summertime. That gives you a free 7-day trial of Seeking Alpha in case anybody wants to read a ton of Palantir articles or just different articles written about Tesla stock or whatever stocks in general. Yeah, alrighty guys, so Palantir stock, $50 not unreasonable. Palantir, the enigmatic tech provider for the CIA, Department of Defense, has attracted significant investor interest since going public in 2021. The company is expensive, but it offers visionary products that streamline operations and decision-making for government and commercial clients. Palantir's financials are improving, with growing revenue, higher gross margins, and a swing from operating losses to profits. The company's growth potential and profitability make it an attractive investment. Now, first off, one thing I want to hit on that I think is important that I talk about this is there's a worry from some out there. What happens if interest rates were to get lowered? Right? And what does that mean for Palantir's profitability? Because they've been getting a lot of profits from just treasuries recently, right? One, okay, we don't know when the Fed's going to lower rates, right? We have no clue whenever that's going to transpire and we're actually going to get into a lower interest rate environment. It could be 6 months, 12 months, 18 months, 24 months, 2 years, 3 years, 4 years, 5. We don't know when that is, okay? Eventually that will happen likely, but we don't know exactly when that's going to be. So Palantir's got quite a bit here at least to make a lot of money from treasuries. Also, whenever the Fed does start to lower rates, we have no clue really what, let's put it like this, okay? We don't know how much they'd actually lower rates. Unless we're in some sort of epic recession crash, they're going to lower rates very slowly over time, which means, once again, Palantir has a long time to earn a lot of money from treasuries, okay? At least a year or two, let's call it that, right? Now, if they do, let's say the Federal Reserve does lower rates rapidly and, where some major crash is going on or something like that, well, in that sort of situation, then Palantir's valuation, you'd be willing to pay a lot more for the stock, right? Because then if you're doing your discounted free cash flows, you're running your numbers at the end, you're projecting and you're dividing out by whatever the Fed funds rate is at that particular time. So let's say it's 1% instead of 5%, you're going to get a very different number and you're going to be willing to pay a very different price for Palantir stock. So it's something to consider, but I don't think it's as big of a deal as maybe some folks have made it out to be. And so I do think that's something important just to speak about there, okay? Now, they obviously go into a ton of different things in this article here on Seeking Alpha. Summary: overall, despite the risk, we like what we see when it comes to Palantir. The company's financials have never been in better shape. True. Balance sheet and income statement, definitely, and cash flow. And the company's product remains sticky. If management can reduce dilution and keep results coming in, and thus the premium multiple, then we think it is possible that a price target of $50 is within a few years is not unreasonable. We rate Palantir stock a strong buy. Okay, alrighty. So my thoughts about Palantir going to $50. And by the way, let me just say this before I talk about Palantir to 50 and when I would expect Palantir stock to be 50. Like if Palantir wants to have their stock keep going up over the next many quarters and many years, they need to become a company that quarter in and quarter out, you can count on them doing what? Beating numbers. They got to continue to come in, beat analysts' expectations on EPS and revenue. If they can do that, then the stock can continue to fly and we can have a really fun time in the stock for years to go in the future. But they got to be that company that, you know, going into every quarterly results as a Palantir shareholder, we're all confident. We're like, they're going to come in, they're going to kill it. They're going to come in and beat. There's certain companies like that, right? I think Meta's been a great company like that over time. I think Amazon's been a great company like that over time. Tesla was a great company like that for quite a time until interest rates went up a lot and that negatively obviously affected their business. But they were a company for a bit there where it's like you knew every quarter they were coming in with revenue beats and EPS beats. Palantir's got to become that company. $50. So my opinion is I don't think we're seeing 50 short term. I do think probably in the next 3 years, 50 is realistic. Now, there could be a situation where, let's say Palantir overshoots, right? And maybe, you know, if Palantir goes above 50 in the next 3 years. If that happens, then you could see a pull down after that. Kind of like Tesla overshot, right? Tesla, you know, 2 years ago, Tesla was a $400 stock. It's a $234 stock. It way overshot. It priced in way too much good news. It needed way too much of a perfect environment, and the valuation got way too stretched on Tesla, right? And so it went to 400, and now, you know, we're down significantly on a 2-year basis in terms of, you know, where that stock's at, right? Obviously, shareholders like myself have made a fortune on Tesla, even, you know, with the stock price being where it's at, because we got in so far before. You know, I was buying that stock, what was it, 2018, 2019? And then people have also made a fortune on Tesla that got in at the very beginning of this year. Outside of that, you know, if you had bought Tesla in the last 3 years, you're probably down on all the shares you bought for the most part, unless, once again, you bought at the beginning of this year or you were like me and you bought many, many years ago. So there's a potential that could happen with Palantir where just, you know, too many people get too excited, way overshoots and goes to $70 or $100 in the next 3 years or something. And then it does a Tesla where it's chilling out for a bit. And there could be that situation. But yeah, I think 50 probably in the next 3 years. But they got to become a company that consistently beats numbers, and they have to become a profit machine company like I think they can become, right? Alrighty, Palantir stock, look out below. Let's get a little bearish on Palantir. Palantir Technologies released their Q3 results showing impressive growth in revenue in international business. I don't know if, you know, this is a bearish article, and I honestly don't think their international business was impressive. Not my opinion on that. I think they got a long way to go with international. The company also achieved GAAP profitability for 4 consecutive quarters, proving its sustainable business model. However, there are 3 big reasons we are bearish on the stock. So their main bearish points are valuation, right? Okay, valuation, I can first understand the pushback on valuation. If you look at price to sales ratio, if you look at forward PE ratio, I understand. But the thing you got to understand is Palantir is now going to start to be judged on a forward PE basis, right? Now, people say, oh, it's very expensive on forward PE basis. Well, remember, Palantir is at the infant stage of profitability. Infant stage. Like, this company's just got there. So, when I think about a business model like a Palantir, they're going to grow that bottom line immensely over the coming years. Like, if we just think about the next 2 or 3 years, I'm not talking about 10 years from now, just the next 2 or 3 years, they should grow their bottom line immensely, year after year after year, for the next several years, okay? And so they could eat up that forward P very quickly. This is something Tesla's been able to do in a lot of companies over time, where it looks expensive and then they eat that forward P alive. And then you look and you're like, dang, it's not actually as expensive as we thought, right? NVIDIA's been able to do this as well over time. So my hope is, and my thought process is, Palantir is going to be able to do that as well. Decelerating revenue growth. Well, the truth is, in regards to decelerating revenue growth, is based upon recent results, that's just not factual anymore at this point in time. If you look at their latest quarterly results, and I did this on a video, I think it was on the main channel recently, looking at their latest quarterly results, right? They've seen a massive reacceleration on a quarter-over-quarter basis, so a sequential basis, and massive revenue growth in their latest quarter on a year-over-year basis. If you look at the gap between what they just put up in revenue growth as far as a dollar amount in this latest quarter versus a previous quarter, or versus a previous year, looking at the quarter over quarter numbers. Either way you slice it, a massive reacceleration of revenue growth here in this story. And that's, I think, a lot's on the back of the AI excitement starting, AIP. And I think that's really going to, let's call it bleed into the numbers in 2024 in a massive way. That's when a lot of these companies are really going to see the fruits of these AI labor, let's just call it that. And that's what I'm thinking is going to play out with Palantir. So just on a factual basis, actually recently, their revenue is starting to re-accelerate again, and I think that's going to be a trend you're going to see over the next several quarters, okay? Next up, they talk about recession concerns. So recession concerns, it is a concern for their commercial business, but their government business is very, their government business is going to be there regardless of recessions, no recessions, things like that, right? And on the commercial side, really these guys have to get a product like Palantir. You're likely going to end up saving more money than you end up spending with Palantir. And I think through the new 2-day boot camps with Palantir, right, I think that's something that I think a lot of these companies are going to be able to realize, like Palantir's, whatever we spend on it, it's going to be worth a lot more than that dollar amount. If we spend, $25 million a year on Palantir, it's going to bring us a lot more than $25 million back. If we spend 15 million, 10 million, whatever the number is, right? So I think that's something that's going to be very, very important as well. So the bottom line is, as far as the stock price in the short term, it can always have tough things. But the good thing for Palantir is they got a re-accelerating revenue growth story. They have profitability continuing to pour in. And I'm just talking about short-term things, right? And S&P 500 inclusions potentially out there as well, right? And so that makes getting the stock price difficult outside of a major market correction crash, something like that, where the whole market just tanked, the NASDAQ tanked, the Qs tanked, something like that. Outside of that scenario, it's actually pretty difficult to get, I think, Palantir stock down in any meaningful way now at this point in time. Alrighty, next one up here. Larry Summers, 25% odds of recession. I want to react to this one, and then we'll get into this one. The bull case is getting stronger, but the bear case is not dead.
So the week, and that was President Xi and President Biden actually meeting around the APEC meetings out there in San Francisco. It's hard to know where this will go, but so far so good. They seem to be trying to really pull themselves back from the precipice.
Look, it's important to have meetings like this. Churchill famously said, much better jaw-jaw than bang-bang. On the other hand, I think we need to remember that there are very difficult fundamentals here. Very different systems, very different views of the world, profound competition in the technological arena, concerns on the American side about China's subversion of our vision of the international system, concerns on the Chinese side that the United States is trying to hold them down. So there are very profound geopolitical forces at play, and this struggle is going to be with us for a very long time.
So Xi coming over to San Francisco this past week, it was absolutely massive. And it was massive for two groups of stocks specifically, in my personal opinion. Because one is that meeting went really well, I would just say overall. Okay, and so I think it's a huge deal for two groups of stocks. The first group of stocks this is really a positive for is ultimately the Chinese stocks. I would not be surprised if a lot of the Chinese stocks do very well in 2024 based upon that meeting. And, like even I think there's certain stocks that are Chinese stocks that are actually even a buy now at this point in time. I think there's a lot that fundamentally changed with Xi coming over and having that meeting and that dialogue. And I think that was a big moment. I think the second component of stocks that benefit, I think, from that meeting, I think also the big, huge American companies that do business in China. I think they benefit in a pretty substantial way from that meeting happening as well, and how well that went overall. I think it's a pretty huge deal. And so, that got rid of a lot of the tension there, in my opinion, and got, obviously the Chinese system and the United States system, very different, right? But at the end of the day, there was a time period when we still were able to get along and still able to do business and be able to look past the differences of our system versus their system and those sorts of things. Obviously, a lot of that changed, during obviously the Trump presidency, and It changed in terms of, the countries working together, started to become definitely enemies, right? The trade wars, the tariffs, the attacks, and really looking at them as a somebody that's trying to take us out, right? And become the dominant power in the world. And Xi just kind of killed all that down in this most recent meeting. And I thought that was pretty impactful there. So I think China-U.S. relations could be very good over the coming years. Now, if Trump becomes president again, there's definitely a realistic possibility that could deteriorate again, and the two sides could definitely become enemies again, and that would make, obviously, Chinese stocks uninvestable if that were to happen. But right now, I'll say as far as progress between the two sides, that's definitely a step in the right direction. No doubt about it. No doubt about it.
So I'm glad to see the meeting, but I'm concerned, and I'm particularly concerned in light of the gravity of the economic challenges that China is facing. And my concern is that, as with the Soviet Union in the 1960s, a sense of very serious economic challenges is going to drive a felt need for increasing assertiveness in the international arena, as we saw with Khrushchev's moves on Berlin, as we saw with the placement of missiles in Cuba. And while I don't see anything concrete like that that's happening right now, I think the economic distress and the link to nationalism, given some of the very strong positions that Xi has taken, is something that is going to require the United States and the West to be on their guard going forward.
Global Wall Street's paid a lot.
So, okay. So the view Larry Summers just gave there, okay, I would say that was very valid until last week. Hearing Xi speak and hearing what he was saying, if you really listen to what that man was saying, he does not sound like he wants any smoke with anybody. I don't think he wants to cause any wars or anything like that. I think it's a very different situation. Now you say, well, maybe he's lying. Maybe he's just making it up. I've watched Xi since he came into power. And the reason I paid attention is not just from U.S. business side, but also because I've owned Wynn Resorts on and off over the years, which they operate in Macau, which that's a region that is kind of China, but kind of not. It's kind of like a Hong Kong situation, kind of like a Taiwan situation. It's a little weird how it all works. But I'll say this, okay? When Xi says something, he means it. When he said, we're going to have zero COVID, all that crap, he meant it. And he kept the country basically shut down for the most part for 3 freaking years. And they would shut down entire cities if there was any sort of spikes. He meant it. And I've just watched what he did. I watched what he did in Macau when he came in and cleaned out a lot of the junket operations, a lot of the VIP business, a lot of the potential money laundering and things that were going on. When that man says he's going to do something, he's likely going to do it. And that's likely what he means. So you might not agree with his views on whatever subject it is. But if he says we want no smoke with anybody, he's not lying. Oh, the U.S., we would lie way before China would lie. I would actually say that. Kind of watching the two countries over time. We might say a lot of things and then do something else. In China, it's a little different. Okay, so I'll just say that. And if the man says we're doing this, and this is where we're at, this is probably telling the truth there, okay? That's all I'll say about that. We're much more likely to lie in the United States. I'll say that.
Mentioned this week to those CPI numbers that came out for the United States. Some people are, if not declaring victory, close to declaring victory over inflation. Are they premature?
Look, those were good numbers. Those were better numbers than I would have expected, better numbers than I think most people would have expected. And I think inflation performance has been more favorable, certainly than I have expected over the last year. And I've thought a lot about that, David, and I think there are 2 or 3 factors to emphasize. The first is that policy has been much tighter than was anticipated. In July of 2022, markets were assigning a probability of under 10% to the level of tightness in policy that we have seen so far. So more tight policy has led to better outcomes on inflation. That doesn't mean inflation fears were unwarranted. It means that people took the fears seriously, which was good. I think that's one important aspect. I do think that given how strong the economy has been, there's still a surprise in what's happened to inflation. And that, I think, has to do in part with transitory factors that were pushing inflation up from bottlenecks that are now mean reverting and are pushing inflation down. So I think there's been a little bit of prematurity in some of the declarations of victory. And I'm not sure the inflation figures over the next 2 years are going to be quite as favorable as the market is expecting, especially in light of the geopolitical risks around oil and some other commodities. So we'll have to see whether we're really able to get down to 2% quite as easily as many people imagine. And
what is the risk right now of a recession in the first half?
Yeah, what are we talking about, Larry Summers? Let's look at facts. I hate when people just give opinions and they don't look at freaking facts. What are we talking about here, okay? Facts. Rents, home prices, neither can go up right now for at least the next year. Fact. If we look at commodities, GSG, it tracks the commodity index in general, down in the past year. Considerable weakness here recently. So commodities aren't there to spike anything, right? If you look at auto prices, if you look at so many, every factor out there, nothing's giving you any insight to say, oh, inflation's going to go crazy again. We're going to hop back to the 4s, 5s, 6s, 7s. The Walmart CEO is talking about deflation. That's a whole different ballgame. There's a difference between the rate of increase of inflation, so let's call it disinflation, and deflation. Deflation is literally prices going down. Walmart CEO is talking about deflation's coming in a lot of categories. So, just factually, there's nothing there that makes you say, oh, inflation is going to be a huge problem for us again, unless it's years from now. And that's just throwing darts at the dartboard. No one can freaking predict inflation, more than 12 months in the future. I'll say that. You can't predict inflation 24 months from now, 36 months from now. No one can. There's not a human on the earth that can do that, or a machine, or an algorithm, or anything like that. There's too many factors that can go into that can change things dramatically, right? Recessions, no recessions, stimulus pump, commodities, geopolitical conflicts. There's a million different things, right? So the bottom line is you can look out 12 months from now, and over this next 12 months, we're going to the 2s, and there's just no doubt about that.
Next year.
It's certainly under 50-50, David. I think it's probably on the order of 25% that ultimately something will happen which will cause the NBER to date a recession as having begun in the first half of the year. In general, when recessions come, we don't even know that we're in them until they've been underway for several months.
Yeah, and there's I've said many times, I think there's a high probability we had a serious recession in 2022. It's just the employment market held up well. And so because that one data point held up, everything else didn't hold up. 2 straight quarters of negative GDP. Companies' earnings were incredibly weak. We saw, the strongest companies in the world reported some of the most disappointing numbers they've ever reported. Think about that for a moment, right? Whether you're talking about the NVIDIAs, the Metas, the Amazons, the greatest of the greats, were reporting incredibly disappointing numbers in 2022. And a lot of them were reporting very disappointing numbers even in the beginning of this year. That's usually a recession tell. When the strongest companies, the best growth companies in the world are having trouble growing their businesses, that's usually something that tells you, maybe there's some sort of problem in the economy, right? But very recently, all those same companies have seen a sweet acceleration of their growth rates, which could actually spell that maybe you're coming out of a recession, right? But the government didn't want to call it a recession for whatever reason. They should have just called it a recession. We could have got it over with, and then we could be talking about, we're on the comeback now. Because the data is actually adding up there, right? Just like the data was really showing us that we were likely in a recession last year.
I think you got to recognize that as a real risk. On the other hand, with what we've been seeing in the employment reports, incomes are continuing to grow. So I don't think that is the preponderant scenario.
One thing that may be adverse in store is actually the size of the federal deficit. A lot of talk about that this week.
You know what's going to happen long term? I bet you any money this happens. Long term, they're going to call what happened in 2022 a recession. You just watch. They're going to call it a recession. They didn't call it a recession right now, but watch. Long term, we're going to look back at this time period and they'll be like, oh, 2022, remember when we had that recession? Watch.
We've avoided actually shutting down the government. People came to their senses, but it's only up to next January before they come to it again. And the main issue is not even what they did this week, but the larger issue about the weight that this may impose on the U.S. economy.
If somebody's got a basic problem of being overweight, it's good if they skip dessert. It's good if they check into a spa for a weekend. But what really matters is whether they change their habits and they change their lifestyle.
Check into a spa for a weekend. What, we're going to get a massage? Eat cookies?
And nothing in this agreement or anything in the discussions currently underway is about changing the American habit or lifestyle with respect to spending and taxes. I look at the world right now, and it is the most ominous world geopolitically that I have seen, certainly since the Berlin Wall fell in 1989. I look at projections for the federal budget that call for defense spending as a share of GDP to fall substantially. I don't think that should happen, and I don't think that will happen, almost regardless of how domestic politics play out. And so I think as I look at the budget picture, we got to recognize that we've got a big national defense liability ahead of us that we're not really budgeting for in the current projections. And much more generally, David, is a very profound question of how long the world's greatest debtor will remain the world's greatest and most secure power. And so I think that everybody talks about our resilience as a country. Well, part of resilience for a company, part of resilience for a household is containing your leverage and containing your borrowing. And I think that's something we need to think about as a nation.
Larry, just give us a little wisdom from the 1990s.
So yeah, it is something absolutely should be thought about and considered, but they've been saying the same thing for decades. Decades. This is nothing new. People were saying it was out of control back in the 80s. They said it was out of control in the 90s, the 2000s, 2010s. Now we're in the 2020s, right? Saying the same thing. So just keep in mind, they've been talking about this for decades now.
You served in the Clinton administration back then when they got their arms around the budget. And my recollection, to continue your analogy to dieting, if you're going to lose weight, you can't just exercise, you can't just cut back on what you eat, you got to do both. And right now, one might think we have one party who doesn't want to increase taxes and increase revenues, the other doesn't want to cut spending. How did you manage in the 1990s to get over that hump?
Well, I'm happy to try to answer the question how Bill Clinton managed. I don't want to be the one taking credit for the 1993 budget deal. Look, I think he laid out the case. He brought people together. He was willing to do things that were painful for the people who were his friends. He was able to explain the case to the American people, and that's the kind of leadership we're going to need. And he reaped a benefit that I think people need to recognize and that maybe hasn't come into focus quite yet.
Oh, what? How are they gonna cut that off right there, man? I wanted to hear him finish that thought there. That was gonna be interesting. Dang, man. I don't like it. Sometimes CNBC, Bloomberg, they cut off these dang interviews with like just a good part they're about to get to, and it just cuts off. I'm like, come on, man. Like, let it play out for another 30 seconds. Alrighty, guys, next one up here. The bull case is getting stronger, but the bear case isn't dead.
Let's ask Dan Greenhouse of Solus Alternative Asset Management here with us once again at Post 9. Is that true? Is the bull case getting better?
Yeah, I think the bull case has been getting better for some time now.
More credible now?
Sure. And with respect to the earnings
a year deep.
I think on balance, there wasn't too much to worry about. Obviously, there's a wide variety of retailers to have reported this week. Home Depot, Bath and Body Works, up and down the retail spectrum. And the talk from most of them is that there was a bit of a slowdown, and that not that there's nothing to worry about, but on balance, I don't think that anybody gave me any indication that the consumer was suddenly suffering in a meaningful way.
I'm going to take you, veer way right and say, okay, well, the other side of that question is the bear case dead? Now, how would you answer that?
No, I don't think the bear case is dead. I think this is an important conversation that doesn't get discussed enough, which is two things can be true at once. Tactical and secular, in the sense that over the course of this year, as a lot of us got a little more bullish, the idea wasn't that the bearish narrative was completely dead. It was that perhaps we were a bit early to the case. And over the course of the year, that increasingly proved to be accurate. And I think what you have to think about going into next year, as you have a stock market up in the upper double digits, and a lot of that from a performance standpoint wise driven by the 7 or 10 largest stocks, how much of that bear case that has proven not yet to have materialized is going to start to come to fruition next year, because you're starting to see a little bit of the indications that we were worried about a year ago. Credit card delinquencies are starting to normalize, move in the wrong direction. Jobless claims are starting to tick up. So there's a couple of things on which you can hang your hat to say, well, maybe we're starting to see the early inklings of the slowdown, the long-awaited slowdown.
I wonder if we're starting to see, as the bulls would suggest, the early inklings of a broader rally. As I mentioned in the opening read, right? S&P equal weight up 3% on the week. Russell's staring me right in the face here. On the week, up 5.35%. So these, other dormant areas of the market have suddenly woken up. Is it real?
Yeah, well, listen, I don't think they were dormant. Look at the home builders. They're basically back to highs. Semiconductors, as a group, basically back to highs. There are a couple of industries that you can point to say, the rally is broadening out. I'm not positive that's sufficient by itself to get me super enthused about the market, or at least more enthused than I would have been otherwise.
Well, I'm not saying by itself. That's the whole point, is that it's not by itself. It's that if you have a broadening rally, but you still have, the hot area of the market, the mega caps go up, but now you finally get some pickup from the underloved, underappreciated, and just sitting there at a much cheaper valuation than the mega caps.
Absolutely.
That's like the dream scenario for the bulls.
Yeah, listen, it's probably going to, we've seen it already, obviously. My expectation is that it probably continues into early next year. But to your point about, is the bull case dead? No, because again, the Federal Reserve raised rates by a lot, and that's presumably going to have some effects throughout the economy beyond what we've seen. And it's outlook season, if you will, from the sell side banks. And I think at this point, it seems pretty clear that the sell side is all in on the soft landing narrative. But again, some of those things that you've started to see unfold, bear watching.
Don't you think the Fed's done? Are they saying anything that suggests otherwise?
No, yes. I think
they're like, inflation hasn't come down far enough. We still have a long way to go.
Sure, but this is the same two conversations we've been having all year. One is how much more do they have to raise? And then the second question is how long are they going to leave them up there? Those are two different conversations. Do they have to go more? I'll repeat for the last 6 months. Maybe they raise one more time. Maybe they raise two more times. I don't think that.
This is crazy. This is wild. The fact that anybody thinks the Federal Reserve is still going to raise rates more in the short term is crazy to me. Years from now, who knows? But anybody that thinks in the next, 6 to 9 to 12 months, the Fed's going to raise us, you're just not looking at facts. You're just not looking at data. You're just not projecting out anything. That's just crazy.
Has a meaningful effect on either the broader landscape or my portfolio per se, or the universal my portfolio.
Yeah, so appreciate his thoughts there. And kind of my overall thoughts in regards to the bear case being dead or not dead. I think the bear case is still alive. I think it's just a different bear case. Any bear case around inflation continuing to spike and the Fed has to keep raising rates, I think that's long gone out the window. So now the bears are really clinging to some sort of black swan event, China, Taiwan, like something crazy, or they're clinging to the possibility of a major recession in 2024 and, unemployment going up and all those sorts of things. So I think that's really what they're kind of clinging to in this situation. But that's even those are getting more and more difficult, especially when you look at consumer. If you look at the consumer, confidence has been in the trash for 2 years for consumer confidence, and there's a realistic possibility that's going to pick up immensely in 2024. Now the real wages are going to pick up immensely, right? And inflation is not going to be an issue in 2024. So if you look at it from that perspective, I mean, 24 could end up being a far more bullish year than I think a lot of folks are ready for or anticipating, especially in regards to a lot of the smaller cap stocks, some of the dividend stocks, and a few others. And so there's a significant risk to the upside. There's a risk to the downside that we've talked about, for over a year now, but there's also significant risk to the upside, especially for indexes like the Russell overall. So appreciate you guys joining me as always. Much love. Thanks so much for being here, folks. Access to my Black Friday deal. Pin comment down there. We'll send it over for that 1-day sale on Black Friday. It's 5 days away now at this point in time. Get access to all that. It's a holy smokers. This ain't no jokers deal. Much love, folks, and have a great day.